And for this, I would like to introduce everyone to Mr. Walid Al-Zakaf. He is the founder of InsurBlocks and Rebalance Earth. And with him, he will be joined with panelists Tunde Saloko, Ihab Sokari, and Alex Devoto. With this, I ask Walid to take over the panel. Over to you, Walid.
Excellent. Thank you so much, Surya, for the introduction and for giving us the opportunity to be part of this event. So very excited to be here. As Surya mentioned, we're here to talk about managing insurance models in the age of digital transformation. I'm going to kindly ask each of my guests to give a brief introductions on themselves. So we're going to start with Tunde Salako. Do you want to say a few words about yourself, Tunde?
Okay, hi everyone. It's a pleasure to be here today. My name is Tunde. I'm the CEO and founder of African Insurtech Rising. And essentially, we're a platform that is aggregating all the stakeholders within the Insurtech and insurance space, being enthusiasts to startups, corporates, entrepreneurs, and the likes of what we call Insurtech evangelists. It's a pleasure to be here today, and I look forward to sharing insights with my co-panelists. Thank you.
Excellent. Thank you for that, Tunde. Ihab El-Sokari, do you want to take over and give us a brief introduction on yourself, please? Oh, you are on mute, I believe.
Can you hear me now? Hello? Hear me like this?
We can hear you.
Yeah,
Okay.
Sorry. Hi everyone. Hi Walid, thank you for the introduction. I'm Ihab El-Sokari, co-founder and growth lead within Amandik. Amandik is the digital platform providing insurance in Egypt, making it more accessible and simplifying the process for people who are looking to buy insurance and manage it. So.
Great. Thank you for that, Ihab. Alex Devoto, do you want to give us a brief introduction on yourself, please?
Absolutely. Thank you, guys. Appreciate it. My name is Alex Devoto. I'm here from Levelify, and we help gamify customer engagement and customer wellness via a digital platform for health and life insurance.
Great. Thanks, Alex. So I think, as the title says, managing insurance models in the age of digital transformation, it's fair to say, as the previous speakers have been saying, the insurance industry is changing dramatically. There is, forces externally and internally that are affecting it. So I'm going to start with Alex, actually. For the first question is, could you please give us your views regarding to what extent do you believe will digital technology transform the cost structure of the insurance business systems? What is your views on that, please, Alex?
All right, let's jump in. So I think the digital stuff probably to be more important on the sort of expense ratios than on the loss ratios, right? I think the main thing we need to look about for digital stuff here is in terms of automation. So the more we kind of automate processes, especially on the claim side, but also on sort of getting people to actually buy insurance in the first place and how we sell insurance, that's the important part. So if we can digitize that, we can sort of get rid of something like that human input, and therefore lower the costs because our actual costs of doing things is going to sort of reduce over time. I think probably one of the most interesting things to look at is probably, it's not my personal expertise, so a lot of people here probably know better than me, but if we look at like how Tesla is, may or may not get insurance, they're kind of dipping their toe in the water. The idea of a sort of Tesla, let's say you were driving a Tesla and it gets rear-ended and someone hits the back bumper, all that information is going to get sent in seconds to Tesla. They're going to know what part of the car was hit, if the car was stationary, if it was the bumper was hit, how bad was it hit, where's the closest place to repair it, how much will it cost. So all that data, which would usually take sort of claim specialists some time and how to fill out claims forms and the time and effort, expense, and sort of people, sort of man hours, that can go from being days to being seconds sent to Tesla and saying, this is a $300 claim and Mike's garage is just around the corner, go and fix that. I think that's how we're going to see those claims change. I think automation is really sort of the big one, and how we're going to get rid of sort of low-end sort of people jobs is going to change into digital.
Great. Thank you very much for that. Ihab, So I'm curious to get your views regarding that question. Also, perhaps you could give us some insights on how relevant that is for the Egyptian market.
Yeah, I agree with what Alex said entirely. And
Thank
as
you.
you can see, also data has a very big impact on this, having the client's data, being able to use it in the right way and having the right tools that would definitely drive the cost down and allow us as people who are selling to tailor products that are leveraging for the bigger segments. So in Egypt, the insurance penetration is very low, and products are usually, directed towards higher end customers, but there's a big gap that can be filled using the right products, the personalization, and this would rely heavily on automation to make it a very efficient process, as Alex mentioned, as well as having the data for the customers and for their needs actually to personalize.
Great, great. I like the use of the word customer quite often in both of your answers. That's going to be very useful for the next question I'll be asking later on. But before we move on, Tunde, I'd like to get your insights regarding that question, and also if you could perhaps share some views regarding the Nigerian marketplace.
Well, thanks a lot, Walid. I mean, like, just to put a cap on what my co-panelists have just shared, you want to look at how the value chain, is segmented. The insurance value chain being, the product itself, distribution, the operation, and then the risk. And so what we're beginning to see, from our environs, and particularly, I reckon is the same for most emerging markets, globally, is the fact that you're seeing trends that are breaking down the new product costs because of the emerging technologies in emerging markets that enable and empower products to be disenfranchised. I beg your pardon. And what do I mean by that? A situation where you're seeing micro products, you're seeing personalized and hyper-personalized products. What happens is the product cost starts to deepen, and then you're seeing the flexibility in the product feature. On the distribution side, you're seeing a situation where the cost is being integrated, and then there's the flexibility to onboard new partners where B2B scenarios are making the insurance penetration, accentuate. And then in terms of operations, right, where we're seeing situations where, the cost per policy maintenance is being broken down, because of these emerging techs that are accelerating the situation, in emerging markets like in Nigeria or in Africa for that matter. And at the end of the day, the risk is being capped up, because the higher the risk, it's that delicate balance of the seesaw, the risk with the premium adjusted. So the lower the risk, the lower the capacity the insurer has the tenacity to go lower in terms of product. So it's about taking, and very finally, I forgot to mention, event management situations, products that are customized around events, that are predisposed historically to take place for insurees. So when you look at all of this, what is happening is that there's that tenacity and the capacity to come down and deepen the cost, because everything is not just locked up as it were before traditionally. It's beginning to break down because of the capacity that these emerging trends are infusing into the insurance space. I'll stop there for now.
Great. No, thank you for that answer, Tuneb. So for my next question, and more related to the fact that, I'm really happy that the three of you are startup founders, because as a startup founder, the importance of having, focus on customer centricity and having a digital mindset to be able to use the digital tools that you need to be able to deliver a great customer experience. However, too often, insurance incumbents look at digital transformation as just, I'm going to buy this latest piece of kit, this nice hardware, this nice software, and I'm going to plug it in and I'm digitally transformed. They haven't quite gotten the aspect of adopting and embracing a digital mindset to use those digital tools. So I'd love for you guys to share what would be your top tips as an Insurtech that you would advise an incumbent in terms of how to adopt that so elusive digital mindset. So this time, Tunde, how about you go first?
Okay, thanks a lot, Walid. I think that's a very, the question is quite intriguing because it depends on the perspective or the lenses as to which one is viewing it, right? And quite frankly, we don't want to also just, should I say, entirely write off the mindset of the incumbents. And why do I say so? The reason is because, if you're, um, if you've gone through the pathway of having worked on that side of the fence, and then you flip to the side of being a startup founder and an entrepreneur, you can understand the challenges. First of all, for instance, number one, the cost of policy maintenance and customer acquisition, right, is really high, for all incumbents. Number two, it's time consuming, and the cost of a new product development is essentially very high. And so incumbents more often than not will want a situation where they limit their exposure, limit their risk, because they can't afford, and in between that, there's regulation and everything. So they can't really afford to get it wrong, right? It's a little bit different for our side, right? Because I've been on both sides of the fence, right? So I can understand the mindset. I don't think it's really about them being wanting not to adopt that mindset. It's just that there's just so much numerous risks associated with this, So, but that said, I think it's really about how we can collaboratively encourage situations whereby there's minimal business disruptions when new products are being introduced, for both insurtechs or traditional incumbents, right? And what we can do is to continue to focus on new technology that is emerging. For instance, the keynote speaker talked very, very largely about blockchain and everything that's going on along those lines. So using distributed digital technology ledgers, like blockchain technology will help, in minimizing the risk as to which data is being exposed or can be hacked or can be disseminated without security. Number two, the advent of artificial intelligence and analytics, will help to reduce the propensity to be exposed to fraud and unnecessary payouts, right? A holding accounting structure would also help to forecast the kind of revenue that will be generated within a certain period of time. And that would also help, not forgetting that this has to be auditable and traceable because of the kind of legacy systems that insurers typically will have. And then finally, I mentioned earlier the concept of having event-tailored products, products that are tailored towards certain occurrences that would traditionally occur. So with some of this evolution that is happening, it will help collaboratively, whether you're an incumbent or you're an insurtech, to be more creative, and then also to break down into micro niches, hyper-personalized or personalized products that, will fit at the end of the day. Who is the most important in this ecosystem is the end user and the customer. I'll stop there for now.
Exactly. Thank you for that. Ahab, what's your view on this question? You're on mute, I think.
Yeah, on this, no. I believe how big companies are structured is definitely a hindrance. And in an industry like insurance, can you hear me?
Yes, sorry.
Yeah, and even in an industry like insurance that is highly regulated, it's even harder for them. So for that, it's harder for them to take risks. Also, I believe for such companies to be able to tackle the technology and transformation, they have very broad lines of business when it comes to insurance. So startups can start with focusing on specific lines and having specific areas where they are nimble and we can move faster. So maybe for insurers to adopt this mindset, they need to take it one line at a time. We see the example of Lemonade, for example. They launched with their property rental insurance and they expand, but taking it as a whole big company and going into this with the different layers and the risk of the regulator, it's definitely not easy for them. But I believe with the COVID and what's happening, there is a lot of changes going on, even in markets like Egypt, because of the wave of fintech and how this impacted other financial services, and regulators see the value in emerging markets like Egypt in our case. they're being more open to allow companies and startups alike to take these risks and be supportive of such ways to provide more inclusion and expand the market for everyone.
Great. Thank you for that. Alex, what's your view?
All right, I sort of agree with a lot of what people are saying here. I think the other point to make here, though, is sort of insurance sort of by nature is pretty risk averse, right? People who go into insurance tend to be risk averse people, and kind of drummed into them, you should be as risk averse as possible. I think that issue kind of is prevalent within sort of all of our industry. I think that sort of stops or hinders people from trying to sort of test out new equipment and test out new ideas. I think we have too much as a reliance on the industry of you have to do everything right, and if there's any kind of risk, don't take it because you'll be marked down, much worse by taking a risk and failing. I think what we sort of have to do as an industry is kind of encourage failure. Say, look, you should be go out and doing, trying things, and if you fail, it's okay. And the idea is, you won't have your career sort of, humbled by failing. That you should go out. If you're not failing at all, it means you probably aren't taking enough risk. I think the idea is to create sort of sandpits where people can go and try stuff. The innovation teams can actually go and try something, try POCs, see what happens, get the data, number one, and then two, be able to transfer that from a POC. We all kind of joke from the Insurtech side about we go and do a POC, we're fantastic, that's great, we made a little bit of money, and all of a sudden we sort of sit in POC purgatory for years at a time, trying to get from POC to actually into a line of business, because the person line of business has no interest in taking on that risk. I think it's from sort of the top management's got to sort of stop you, got to say to people, it's okay to take risk, obviously in regulated ways and sort of ways that people won't sort of bet the farm. But the idea is, encouraging people to try things out. I think, look, if you're spending more money on paper clips than you are on POCs, you're probably doing something wrong as an insurer, and you need to go out and try things and make it in a sandbox environment so it can't all sort of burn the whole house down. But go try stuff, get things, learn things, and find a route from going from that POC if you actually like and get some good data quickly and efficiently into a line of business, and sort of piece by piece, sort of walk before you can run, bring those ideas and bring that innovation in, because generally we're not the sort of best people to, or insurance as a whole, best people are sort of going out and trying everything and taking on maximum risk. I think it's that sort of balancing the right amount of risk is what's important.
And how important is, in your opinion, the FCA sandbox in terms of facilitating this kind of risk taking within a regulated space?
Yeah, I think that's a great start, right? But I think it's that plus budget plus ability to actually bring people in, right? So if you just have that sandbox on its own, which I think is a great start, you also need money, right? So, personally, we've gone and spoken to, multi-billion-dollar insurance companies who had no idea about maybe putting some budget in to pay for POCs. If there's no money there to bring people in or to pay the Insurtechs or to pay for the sort of whatever is needed, that's another part of it. I think also getting the right people in there as well who actually have an interest in trying things and then can sell. I think far too often you kind of have the innovation team is siloed, and they go and do a bunch of POCs and have a cool beer fridge and go to all the conferences, but they can't actually get anything from there into the rest of the lines of business because no one else is interested in them. So it's having some kind of top level management, which has those kind of FCA sandboxes and other sort of things where you can try these things out, and everyone's going to go to best interest, say, hey, no, look at what these guys are doing, look at the data they're getting. If it's interesting, we're going to encourage you to use it. Or the other way around, ask them why you're not using it. And I think the real way to do it would be to say every business line, tell us why you're not doing POCs, why haven't you done them, and put the sort of the pressure on the why haven't you done it as opposed to why are you doing it. I think that would be the key.
Yeah.
Great. So Ehab, for my next question, I'd like for you to give your insights in terms of how do you see digital technology giving birth to new value propositions and markets, and following to that is, will a customer come out as a winner from it or not? I mean, we touched earlier on how Tesla, is developing its own insurance products. Are we going to see more of that, or do you see digital technology as an empowerment for insurers to develop new value propositions and new markets?
All right, but I want to go back to Alex on his last point. I believe also there is a potential for big insurers to acquire Insurtechs and small startups and incubate them inside to bring this mindset and try to break the kind of resistance or inability to have this employed. So that could be also a way that makes them work faster. And for your question, Walid, about the potential for new value propositions. Definitely, as you mentioned, the example of Tesla, we can see more and more value propositions popping up, especially for users that can be more tailored for them, seeing the actual need and covering what they actually need. We can see the on-demand insurance becoming more of a norm, aside from being the very obscure, and even in our market, it's not even yet available. So there's a huge potential to cover new segments. Also, it's not just about the products, but it's about how products reach new segments that are not considering insurance. So tailoring products that can be affordable and having, for example, payment facilities. For example, from Amandik, we have in Egypt, usually you pay the full insurance amount upfront, or pay it on like 2 installments, and that's it. So to help attract more customers and help them, see the value of insurance, we started offering financial solutions that allows them to pay on monthly basis, and that helps and allow you to offer more than just product innovation, but also the whole process. And I see also that examples like Tesla and even like with Amandik, we still have some time to evolve because we're an emerging market. We don't have yet the full insurance experience that can be digital in terms of even issuing the policy. So there is a long way. And we can see from day to day that customers seeing the value of convenience that offered to them. And by the time insurers will also see this value, as for the cost saving and the cost efficiency we talked about earlier, and the benefits that it can bring from leveraging the data, that before being digital, it's very scattered. It's not combined in one place to drive better information in terms of business decisions, introducing new products, cross-selling or upselling. So having this and using more of technology on both sides would be a win-win situation for everyone. It would help the customer have a better experience, make them trust insurance even more. And for the insurers or the mediators or all the stakeholders, it would actually bring them benefit, even the regulator, to have the data on the consumption history, on the abusers, and allow this to impact the market as a whole.
Great. No, thank you very much for that answer. Tunde, do you want to share your insights on that point?
Okay. Thanks, Walid. And I like to look at it from a perspective of following the money trail, right? Where are the investors placing their bets as of emerging techs? We're beginning to see along the lines of blockchain, artificial intelligence, big data, mobile, IoT, and then 5G. By the end of last year, whereas we thought within the space that there would have been a significant dip because of the COVID, rather it proved one thing to the whole ecosystem, which is that the insurance technology space is very resilient. And there was the significant difference between 2019 funding, where in this emerging techs investors placed their bets, was pretty much simultaneous to what happened in 2020. With insignificant differences per se. I think that the total funding off the top of my head was about $7.1 billion thereabout. Now, when we look at if we now look at and I said, let's follow the trail, right? Because these are not just going to be assumptions of what we think. It's where the money is going to, because typically where you follow the money trail, that's where, the next best thing is going to come out from. That's where the capacity and the potential to unlock a new economy, new value chain, new scope of products usually would happen. So having said that, I think it's very interesting to see that looking at last year, the big names, some of which had been mentioned earlier, also were able to do their Series B, Series C funding, particularly in North America. And that, when you look at the insurance technology stack moving along the lines of claims processing, policy underwriting, policy management systems, etc. These are trends that most of these big names in the Insurtech space were able to use to raise their next level of funding. The Oscar Healths of this world, the Lemonades, the Hippos, etc. So as a result, to answer the question, what's going to happen is this is going to be a continued trend until we start to see other very crucial technology that has the capacity to attract this level of funding. The more funding that is coming into these spaces, the more we're going to realize innovation and that digital trail, which even incumbents would also have to latch onto. And we started seeing that paradigm shift happening because ultimately, it's about re-engineering the system, for what makes sense to the end user at the end of the day. Now, coming to the consumer side, which is the other part of your question, I think it's very critical to understand, as Iyab also said, it's looking inward and saying, how would the opt-in, should I say the opt-in consumer experience, how can we create that within the insurance technology space for the whole insurance industry, as it were? I say this a lot, that insurance is not a product that you wake up and you're very excited to purchase. You don't have that experience, which will normally typically come with other products you're purchasing. For instance, you're buying a car that you've saved up for years and years. You're looking forward to the day you're going to, get into that car and drive it off and, feel good about yourself. But for insurance, it's totally different. You're very angry and upset because well, at the end of the day, I might not even benefit anything. So that customer, the flip side of focusing from the customer, just focusing on the customer needs to the customer experience, to the opt-in and the voluntary buy-in by the consumers is evidently where the insurance space is headed to. And that's what the Insurtech space is going to catalyze. That's what is going to galvanize, because at the end of the day, when it's successfully been able to flip to that side of the narrative where people are excited to say, oh, wow, I purchased this, I bought a new car and I have, an insurance embedded on top, and, it just makes me bulletproof and risk averse to any accidents that may occur, and the customer actually feels that excitement, then we would have gotten to that point where insurance is not the traditional sale. It's not insurance as normal. It becomes the new normal, for the consumer experience. I'll stop there for now.
Great. No, thank you very much for your insight. So we're now in Q&A time, and there's quite a few questions that's come in. So I'm just going to take the first one from Claudia, which is, how do you see the role of claim adjusters in Insurtech in the future? And would pricing be impacted by a higher level of, quote, soft and quick, unquote, claims payment? Feel free to jump in, any of my panelists, if you'd like to have a go at that question.
I'll jump in very briefly. On my Tesla sort of example earlier, I think the claims adjuster is going to go away. If you can get all the data from the majority of small claims, especially, and the car has all the data, has all the cameras, knows exactly what happened to it and sends it to the insurance company, or Tesla in this case, as it may be, there may not be a need for a claims adjuster at all in that sort of extreme case. Now, that's obviously an extreme case. I'm kind of pointing it out to make some fun. But I think that's certainly one way it's going. And I think this, I think in total, we probably have more data, and how do you sort of pass that data effectively is going to be a sort of bigger issue for the sort of claims as a whole and for the sort of claims adjusters themselves.
Great. I'm just going to move on to the next question so that I can cover as many of them as possible. So there's this question from Samuel, who is based in Kenya, and I think his question is, with regarding to the African market, what can be done to make insurance more affordable? Is it possible to make money by just enlightening people about information? I don't know if either Tunde or Ihab, if you guys want to have a go at it.
Yeah, sure. I believe it starts with having the customer at mind and seeing that insurance is not a product that you sell, but it's something that solves a problem for the end user, or solves a concern or a fear that they have. So it's about understanding the need and having an acceptable price point where the customer can actually see it as affordable, because sometimes in our case, for example, we had a lot of customers seeking health insurance for individual. It's a product that is not very common in Egypt. Insurance companies are not eager to sell it. They're always targeting SME products or corporate products, and they totally ignore the individuals. So the products were not designed to serve that segment, and they were very highly priced. So we came in, we understood what the clients need, we saw why they're not converting and why they're not buying. We did our research and we created a product that helped bridge the gap. So you can see the gap in the market and try to formulate a product that suits the need based on what the clients are looking for and your understanding of them, and trying to make it more affordable through either ways for payment, like we did in our case, which made a huge difference. It makes it easier for people to pay as they go, which is very common from other industries and from other products that they're using, and with the credit cards and everything. So that definitely helps. And also, in terms of awareness, I believe as a startup, you have a role to be there to answer the questions, but awareness, it has to be like a collective effort, especially in markets like the emerging markets that we have with the low penetration. It has to be driven with more of a agenda that the regulator supports, that the big insurers come together and try to push and have this as something that people can understand and reach through media that is not just digital, that is not just limited, it's more of a wide media, and also to have the client in mind and educating them through allowing them to try the products. So maybe insurers can start to think that I don't want to win on the first day. I want to create the base. I want to have the long term and let people trust insurance, because in our markets and in our cultures, insurance is a little bit, people lack trust in it to an extent. So by allowing them to try and having a low entry point, they can grow them and they can upscale the clients. So maybe give up on a little bit of, the revenue at the beginning, just for the sake of expanding.
Can I double down on that?
Tunde, perhaps from your experience, great. Tunde, from your experience in the Nigerian market, what advice would you give to Samuel?
Well, I think, Samuel, it's really just about it's about a holistic approach, right? It's delicate balancing, with by all the stakeholders within the ecosystem. So the insurance, if we look at the history of insurance traditionally and what has happened as it's been evolving over the years, you are seeing that it's different legacy systems in different parts of the globe, that are catalyzing how people are able to purchase insurance. Now, coming down to the African markets, Nigeria, Sub-Saharan Africa, North Africa, as the case may be, it has to do with what is the customer journey, right? And when you look at what typically happens between insurance and the customer and the consumer, there's usually a chain of middlemen in between, right? Where you have brokers, you've got customer call centers, etc. And we're beginning to see a shift where startups and digitally enabled organizations, Insurtechs, as we like to call them, are removing the middlemen, right, and going around the traditional legacy systems. So that only brings in the capacity to scale and to increase penetration, right? And I'm very optimistic that within the next couple of years, short term to long term, you're going to start seeing different models that are breaking down this legacy insurance systems, not because they are bad, and not because they are not needed. It's really because at the end of the day, the consumer experience on other sides of in purchasing other products, basic products, has really morphed. Now, if we go into the fintech space, for instance, you're seeing situations where you don't have to walk into a bank anymore, because you have startups that have created products that enables you to register or open a bank account from the comfort of your room or from your phone, and this just goes without saying that as the consumer appetite continues to morph, what's going to continue to happen is the experiences, the processes, and the systems surrounding the insurance space will also continue to move in that direction. And like, I think it was Iab that mentioned something earlier about the COVID hitting. COVID has just really accelerated a lot of things. Even regulators are looking at the possibilities of enhancing digitization and innovation, within the existing frameworks and legacy systems that are existing as of today. So it's going to be a very dynamic view in the next couple of months. Technology, in the next couple of years, I beg your pardon, technology is playing a very, very critical role. And, we're seeing some of this innovation happen right under our noses here in Sub-Saharan Africa, in North Africa, like you have rightly just described his own products, where the consumer, is the focal point of the insurance company. The consumer is able to get what he wants to purchase, in line with budgets, in line with affordability, in line with accessibility, in line with getting quick responses, enabled environment where things are not just business as usual. And that's where the concept of embedded insurance actually flows in, but I think that's a conversation for another day. So I'll just let Alex make his own comments.
I'm afraid we're out of time. So I'm gonna thank you all very much, for sharing your insights. It has been a pleasure, moderating this panel. And I'm going to pass over to Surya, who's going to take it from here. But thank you very much, and thank you for the audience for the great questions.
Thank you, guys.
Cheers.
Thank you, everyone.
Yeah, thanks a lot, Mr. Walid Al-Sakaf and the panel. It was a great insight. And I would like, we'll be coming back for more questions. So my request is for the panelists to stay back, because a lot of more questions are going to come as far as emerging markets and insurance are concerned. So I would like to invite Mr. Swarna Ganguly to call on Surya Saha for the book launch of The Digital Choices. To Ganguly, Mr. Ganguly.